Bill, thank you. We are in the diplomatic room here at the Treasury Department. I'm joined, as you mentioned, by Secretary Geithner. Mr. Secretary, thank you. As you entered the room, the live coverage on CNBC carried the graphic, "Is Geithner's neck on the line?" I heard Larry Kudlow say Geithner was really kind of a disaster. Mr. Secretary, that was among the nicer comments I just heard from Larry Kudlow. What do you have to say for this plan you just unveiled? Markets down 285 and change, not a ringing endorsement.
Brian, this is an enormously complicated financial crisis we're facing. It's going to take a lot of time to resolve. It's going to be hard to do, but we're going to keep at it until we fix it. What's really important is that we move alongside the economic recovery and reinvestment plan to bring a new program that provides direct support to help prepare the financial system and get credit flowing again to small businesses and to consumers. That's the most important thing we can do. We got to do it together as we move to help address this comprehensive housing crisis too. The programs we've seen so far have been too limited, too late. They've come with too little trust and transparency. They've been too tentative, and they provided too little direct support to some of the people that have been most directly affected by this crisis. And we're going to try to change that by restoring confidence that what we do is going to be guided by what's in the broad public interest, with a comprehensive program of financial support moving on all fronts together at once, with the kind of strong conditions we need to help give the taxpayers of this country confidence that their money is going to be used wisely, with the kind of transparency and accountability that will, again, help restore some confidence in the broad recovery plan.
Charlie Gasparino was just on the air saying at first the guidance was this isn't going to be a bad bank, and everyone cheered that. It's going to be an aggregator bank, but he said of what you announced this morning, it's not quite an aggregator bank either. What is it?
Let me say what we're trying to achieve. What we want to do is to find a way to provide government financing alongside private capital to help get these markets working again. This thing is very hard to get right. And what we want to avoid doing is a program that's going to leave the government vulnerable to the charge that we're going to overpay for a bunch of these bad assets and provide a disguised subsidy to the financial system. That's something that I am not prepared to do. Public financial assistance cannot solve this crisis alone. So what is very important we do is, again, to try to do things that can help bring private capital in, and that'll help solve this enormously complicated problem of trying to figure out how to get the value of these things right. And if we provide substantial financing, which is something only the government can do now, we can help do this in a way that's going to help protect the taxpayer and, again, provide maximum benefit in getting these markets working again. But Brian, this is a very complicated, challenging problem.
Taxpayers would like to know, if it can be put simply, how bad is this?
Brian, we have parts of our system are very strong and functioning well. We have banks that are growing and expanding and increasing lending. You're seeing some thawing in the credit markets, so companies are starting to be able to borrow again. We've seen interest rates start to come down across the country and around the world, but parts of our system are still very badly damaged. And our judgment is, I think the President's judgment, certainly my judgment, that we're going to have to do substantially more, again, to try to make recovery work. And as I said earlier today, the financial system is now working against recovery. We need to make it work with recovery, or the effects of the recovery investment program will be more limited, and the ultimate cost of this thing to the taxpayer will be greater, and the damage to American business will be more damaging.
Does it bother you that by the time I saw you in the hallway outside this room, you were still coming from the speech? The Dow was tanking in the neighborhood of 300 points.
As I said, you know, this is and I think people understand this, certainly the markets understand this, that this is a acute and severe and complicated financial crisis. And what we need to do is to be honest and open with people about how hard this is going to be, and to be honest and direct that it's going to cost resources and it's going to require the government taking risks that the market cannot take. But that's what governments exist to do. These things will not burn themselves out. The only way forward is for us to try to move as comprehensively as we can to, again, try to get credit flowing again.
Does it bother you that Frank Rich in the New York Times on Sunday called you an alumni of the Financial Bubble's Insiders Club? Some of it's getting personal about you, Mr. Secretary.
Brian, I have spent my life working in the public institutions that are responsible for our nation's economic policy. I've almost never done anything else except when I was trying to work my way through college and graduate school. My entire life, I've been working in trying to improve basic quality of economic policy for our country. I've worked with some incredibly talented people. It's been a great privilege to do that, and I feel a huge personal responsibility to try to do everything we can to try to restore confidence around the world in the quality of leadership over our financial system and our economy. I know the President believes that deeply, and it is a great honor for me to be able to work with him and his colleagues in this administration in that incredibly important task.